US-China trade war escalates to an extreme level, with both sides using every tool available: tariffs, export controls, financial sanctions, currency manipulation, etc. The long-term consequences would be severe. However, China is likely to suffer greater losses. 1. Dependence on trade. China's economy heavily relies on exports, especially to the US. Losing access to the American market would cause serious economic trouble. Additionally, China depends on importing advanced technology, such as semiconductors, from the West, making it vulnerable to sanctions. The US economy is more self-sufficient, with a strong domestic consumer market and diverse trade partners. While losing access to cheap Chinese goods could drive inflation, the US could shift its supply chains to countries like India, Vietnam, or Mexico. 2. Financial system and capital. China's financial system is tightly controlled by the government. If it were restricted from using the US dollar or cut off from the global payment network, SWIFT, its economy would face a major shock. Additionally, China's already fragile real estate market could collapse. The US dominates the global financial system, with the dollar as the world's reserve currency. While China could retaliate by selling US Treasury bonds, this move would likely backfire by reducing the value of its own holdings. 3. Technology and military. Despite rapid progress, China still lags in key technologies like semiconductor manufacturing, aerospace, and advanced weaponry. If the US further tightens technology restrictions, as it did with Huawei, China's ambitions in AI, 5G, and chip production would face significant hurdles. The US holds a technological and military edge thanks to its strong innovation ecosystem, Silicon Valley, and research capabilities. Even if China limits rare earth exports in retaliation, the US and its allies could find alternative sources. 4. Political and social stability. The Chinese government maintains strict social control, but economic downturns could lead to rising unemployment and unrest. The Communist Party's legitimacy is closely tied to economic growth, making a prolonged crisis a potential threat to its rule. While the US faces political divisions, its economy is more adaptable. A crisis would create short-term instability, but the country has the flexibility to adjust and recover. 5. Global alliances. While China has support from Russia, Iran, and some developing nations, these allies lack significant economic strength. In contrast, the US benefits from a powerful alliance network: EU, Japan, South Korea, India, Australia, which reinforces its economic and military dominance. The West can separate from China more easily than China can replace the US-led global order. Conclusion. In the long run, China would face greater losses due to its reliance on exports, foreign technology, and a more fragile financial system. The US would also suffer, but with its flexible economy, strong financial position, and technological advantage, it is better equipped to adapt. That said, a full-scale economic war would be disastrous for the world, disrupting supply chains, triggering market downturns, and slowing global growth. In a worst-case scenario, it could even lead to a new Cold War with heightened geopolitical instability.